You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
All right, everybody, that music means it is time once again for your Options News Rundown for today, Wednesday, July 10th. My name is Mark Longo. Dan Passarelli, your usual host, is on assignment at his actual annual Market Taker Mentoring Retreat. So we hope he's having a good time. Meanwhile, the show must go on. So let's get started. Of course, you can't start the day without first knowing how you got here. So let's look back a little bit first. And let's see how Tuesday shaped up in the markets. Actually, a bit of a quiet one. Most of the major indices ending effectively slightly unched on the day, a little bit up, a little bit down, but not a lot going on out there in either direction. Our old friend VIX Cash also pretty much unched on the day, finishing the day right around 1410 or so. In terms of options action, what was lighting up the tape on an otherwise quiet day? Let's find out. Let's look at our top 10 most active equity options for Tuesday to give us some idea of what might be trading here today on Wednesday. Start with number 10, Netflix, with 161,000 contracts on the tape. Number 9, Square, 164,000 contracts on the tape. Number 8, Bank of America, 169,000 contracts. Number 7, Micron, 186,000 contracts. Number 6, AT&T, or Telephone, for all you old school folks out there. Coming in at number 6. Number 5, Amazon. A little over 250,000 contracts on the tape. Number 4, Apple. Actually down to number 4. A rare day outside of the top spot for Apple there with 263,000 contracts on the tape. Number 3, Facebook. 279,000 contracts. Number 2, NIO. Going out to China for NIO. 377,000 contracts. And taking the top spot on Tuesday, AMD. 385,000 contracts on the tape. tail of the tape was pretty much the same for the major indices. SPY only putting about 1.68 million contracts on the tape. ADV about 2.4 million, so a pretty light day out there in S&P land as well. Of course, earnings season is about to kick off again in earnest next week, but that doesn't mean we're done with announcements this week. Some things to keep an eye on here today. On the earnings front, we have actually good old Bed Bath & Beyond. Yes, they're out there reporting after the bell on Wednesday, July 10th. Coming into the earnings move report, remember you can find all these move reports for yourself completely for free over there, theoptionsinsider.com. Head on over to the site, click on the Options News and Articles tab there on the top part of the site, and you'll find all that good stuff there. Scroll on down, you'll see all the earnings reports, quite a few of them over there. And if you did that, you'd see that BlackBerry coming into the report here was pricing itself at the stock at least right around $11.50. What they were pricing in terms of expected move, about a 20% move here for their earnings straddle, which is actually fairly rich. Looking at previous reports, they've only averaged about 10.5% in terms of what they've been pricing in. So roughly double, at least from percentage terms, of what they're expecting here for movement. So perhaps a little bit of some action to be expected here in good old BlackBerry. 20%. That's a big move on an $11.50 name. So we'll keep an eye on that one after the bell. Of course, the big news in the markets on Wednesday is indeed old friend Mr. Powell heading up to Congress for his testimony. Everyone looking for some insights, some clues, some nuggets into what the Fed will do next. For rates, if you want to know what the market is actually predicting, then the best place to go, of course, is the old FedWatch tool with our friends over there at CME Group. Just type CME and FedWatch into your Google search bar and let Google do the rest for you. If you did that, you would see that what the market is currently pricing in at the next FOMC meeting, which at the time of this recording is a mere 21 days and 13 hours away here. The market currently pricing in roughly 98% probability of a 25 basis point cut here, putting it in the 200 to 225 basis point range. About a 2% chance that they'll go even farther, but market looks like leaning fairly heavily in the 25 basis point cut direction. We'll see if Mr. Powell's testimony today will shine any more light on that and perhaps change some of these probabilities a little bit. Other things to keep an ear on and an eye on as you head into the trading day today. If you've been paying attention over the last few days, you've probably been hearing about this crazy, somewhat scary thing people are calling the gamma trap. It's interesting. All of a sudden, everyone from the Journal to Money.net and every other publication in between, suddenly experts on a little thing we like to call gamma around here. Gamma, of course, we all know in the option space, the rate of change of your delta. So you're getting into the Greeks there a little bit, which can be an obtuse concept for a lot of people to wrap their heads around, which is always fun to hear different outlets and others trying to explain this very obscure concept in terms and phrases that people can readily understand. But what people tend to be, and this term gamma trap, it's very catchy. I'm sure someone put this out in a research paper recently, which is why everyone is running with it all of a sudden. But what effectively, if you're hearing this and you're confused what the heck you're talking about, what effectively they're referring to, listeners, is the notion that a lot of the large liquidity providers, aka the big banks, the market makers and others, and a lot of these products, particularly talking now with the onset of weeklies, they have resulted in them effectively acquiring a lot of long gamma, aka long option positions in their books. That requires them to hedge them fairly aggressively at what we call scalping gamma. It's a way to protect yourself and pay for all the time decay that you're incurring by acquiring all of these long options positions. So if the underlying in a particular index or a stock, whatever it might be, rallies, you're going to sell some shares, and if it drops, you're going to buy them back. So what the effect of that is, and that's why they call it a trap, is what it can do is it tends to keep things sometimes. Again, that's why I think this is a little bit of a misnomer of a term, but if you're hearing it out there and you're confused, they call it a trap because it can keep you effectively pinned to a certain strike or strike range, as these big firms are out there selling above a certain range and buying below a certain range to hedge and scalp their gamma. So if you're hearing all this, of course, dig into our website. I encourage you to check out some of the sources we have on our site that can explain things like gamma in a lot more detail. Options Bootcamp, a great place to go with our friend Mr. Dan Passarelli. Also, Options Playbook Radio, another great one to go to. Just search for gamma. You'll find all of of the many great episodes we've done on that very concept and how it could impact the marketplace. It is interesting to see these new wrinkles of research now that we've seen the massive adoption of weeklies, particularly in a lot of the equity options out there, and how that may be changing the gamma spectrum a little bit. Remember, weeklies, products that are close to expiration, very high in gamma, and as a result, that could make for some interesting developments. If you're confused by all that, check out Options Bootcamp or Options Playbook Radio to learn more. And that's going to do it for your options news rundown for today, Wednesday, July 10th. A little bit of data, a little bit of what to watch in the market, as well as a little bit of what to watch out for. Keep those eyes peeled out there. Remember, we're heading into those typically quiet summer periods, so the markets can be thin. We could have a lot of extreme swings without much underlying volume as a result, so something to keep an eye on here. Don't force it. If it's not lining up the way you want, keep your powder dry. Live to fight another day, so we can see you back here tomorrow for another Options News Rundown.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.